Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines. Asian markets have opened lower as investors brace for volatility. The GST Council will review the entire list of items falling under the 28% tax bracket and the composition scheme today. The country's largest lender, SBI, will come out with its second quarter earnings today. And third-party logistics provider Mahindra Logistics is set to make its stock market debut today. Well, let's turn to the international markets now. And US stocks fell after Senate Republicans announced that their tax plan would delay cuts to the corporate tax rate till 2019. Julie Hyman filed this report wrapping up all the action on Wall Street.
U.S. stocks sold off as more details emerged throughout the session of both the House and Senate's tax proposals. Among the things that troubled market participants was the report that it was possible a corporate tax rate cut could be delayed to 2019. That sent U.S. stocks to their lows of the session. They did end up rebounding to some degree by the end of the day, as it was reported that perhaps that part was negotiable, that there would be maybe an immediate corporate tax rate cut. So still a lot of moving parts here. Also affecting the sell-off throughout the day, a high-yield credit sell-off that's been occurring that spooked some investors, happening in part because of a glut of corporate issuance. Technology shares leading the declines for much of the session. They had been on a 10-day rally. In particular, some of the large-cap tech stocks like Apple were down, as well as much of the semiconductor sector. We also saw a spike in volatility, not surprisingly, with the sell-off in stocks. There were a couple of notable bright spots on the consumer end, interestingly enough. Macy's, the department store operator, shares of that company rising even after comparable sales last quarter missed estimates, but the company's CEO expressed confidence in holiday sales during that season. And Coty, the cosmetics giant, that company saying that it expects to see better than expected, it had better than expected earnings last quarter, and gave a positive forecast. The company said it is profiting from its $12.5 billion deal to buy many brands from Procter & Gamble. Julie Hyman, Bloomberg, New York.
And some of that sentiment has actually moved on to Asia as well, with the Asian markets all having opened in the red so far, with selling pressures seen across the three early openers. The Nikkei is currently down as much as 1.2%, and the Australian and South Korean benchmark is also in the red. But what's happening in India? Darshan Mehta and Agam Vakil are here to tell you exactly what's going to happen. Darshan will give you the trade setup and Agam will talk about the futures and options space. Darshan, negative start anticipated.
Yeah, 100%, because just look at the SGX Nifty and you will get to know the downtick that we'll see. It was down almost 50 points. So a 50-point downtick. So the bad news continues as far as our markets are concerned. There is significant amount of weakness. So that's a negative opening. Now, Tata Motors will react. The ADR ended down almost 2% lower. The results came in during market hours. So pretty much the ADR also reflecting, but the ADR reacted post the conference call. Vedanta ADR was down almost 1%. And finally, if you look at it, ICICI Bank was one of the few gainers that gained almost 1% in trade. As far as crude is concerned, very surprised that crude is trading muted in early morning trade. It just rose 0.6% after all the issues as far as Saudi is concerned and Saudi and Lebanon is concerned. But commodities weak closing for base metals on the LME. The biggest drop came in as far as nickel is concerned. Nickel was down almost 3%. The other commodities, the aluminiums, the zincs, the copper, all of them were down almost anywhere between 0.5 to 1%. COMEX copper currently is trading with a positive bias. As far as, let's move to China, steel is down 1%, rubber is trading down almost 0.4% in China. Even base metals currently are trading muted, so there's no fireworks on the base metals in China. Gold, it's gaining for the third straight session, so there seems to be a lot of appetite for the yellow metal currently. As far as some of the fund flows are concerned, FIIs sold in almost 713 crores in the cash market. DIIs bought in almost 213 crores in the cash market. So DIIs are turning net buyers. FIIs have actually bought in more than 10,000 crores in the cash market. This is on a month-to-date basis, and this includes the big block deals that happened. That is why this elevated figure. And on a month-to-date basis, DIIs have been net sellers to the tune of almost 132 crores. Now, as far as what moved, what didn't, the broader markets did manage to outperform the benchmark. The Nifty was flat in trade, but the mid caps and small caps did very, very well. The VIX came down. It dropped almost 2.5%. What didn't do well were the pharma stocks. So selling was seen in Nifty Pharma, which was down almost 0.6%. So the Nifty was absolutely flat. What contributed after days of falling? Reliance contributed, ICICI Bank contributed, India Bulls Housing Finance, this big block deal was there post with the counter moved. And on the losing end, HDFC continues to bleed, and Kotak among the private banks was not doing well. But Agam, what's the FNO situation like?
Well, Darshan, as you know, that today is perhaps one of the biggest days in terms of earnings season. So we're going to be watching out for that. And that is also going to move not only the Nifty, but also the broader markets. But starting off with the Nifty, what's happened yesterday is, again, it was largely flat. So we've seen very little move changes as far as open interest is concerned. When it comes to the Nifty Bank too, again, in terms of returns, just about 0.4 upwards, but no change whatsoever when it comes to the open interest there. Moving in as far as the VIX concerned, because of the fact that it was a flattish day of trade, VIX has fallen still about the mark of 12, or rather that 13 for that matter, at around 13.3, but it has declined by around 2.5%. The Nifty put call ratio predictably hasn't changed either, at around 1.35 as against 1.36. In terms of changes in open interest, this is where you may see some large moves. Now, this of course is further away, so I'm not going to address the 10,800 calls so much, but we have seen a little more writing coming around in the 10,400 call, and again, a lot more writing in the 10,200 put. So we'll be watching out for these levels as we move into today's day of trade. In terms of the band, we have Gen Irrigation moving into it, and we're also watching out for other counters such as Page Industries, which has seen a near 8% rise. Its underlying is at 22,591 now. So watch out for that. And the other stock that I'm watching out for is Pidilite Industries. We have seen a substantial amount of short covering on account of good numbers out there. So the stock itself has also moved up 6%. But again, Alex, it's going to be a big, big day for earnings, and we will see a lot more action there.
Absolutely. And we'll watch out for all of that. Agam will be back over the course of the day to tell you everything that he's spoken about so far. But let's take a check on the rupee and the bond market. The Indian rupee on Thursday closed little changed against the US dollar as traders avoided taking long positions ahead of the key inflation data. That will be out on Monday. Saloni Dhanuka is here with all those details. Saloni, over to you.
So, well, Alex, the Indian rupee yesterday ended marginally lower for the second consecutive session after trading in a narrow range of 64.85 to 65 per dollar for the most part of the day. The local currency eventually ended 2 paise higher at 64.94 levels against the dollar. Now, traders prefer to remain on the sidelines ahead of the GST Council meet today and the key inflation data next week. On the global front, Asian currencies were trading higher as the dollar fell on the concerns that the tax reform policies announced by the US government last week will take another year for implementation. Now, coming back home, dollar rupee is trading at 64.16 levels against the US dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade. Moving on to bond markets, the 10-year benchmark yield ended 1 basis point lower at 6.93%. And lastly, global funds reduced their rupee debt holdings for the fourth consecutive session yesterday. They reduced their debt portfolio by approximately 1,600 crore according to NSDL data, Alex.
Thanks for that, Saloni. Now, it's the all-important GST Council meet in Guwahati today, and according to Bihar Deputy Chief Minister Sushil Kumar Modi, tax rates on as many as 200 products are likely to come down. Bloomberg Quint's Nikunj Ori is tracking that meet and filed this special report.
Lowering of rates on items that currently fall under the 28% tax category and more relief for small taxpayers are a few things that can be expected from GST Council's 23rd meeting to be held in Guwahati. About 200 odd items that currently fall under the 28% tax slab, 80% of these items are expected to be brought down under the 18% tax slab. Now, as far as relief for small taxpayers is concerned, the GST Council will look at revamping the composition scheme which can be availed by small taxpayers. A group of ministers was constituted to make the composition scheme more attractive and has recommended having a flat GST rate of 0.5% of the taxpayers' turnover. Remember, currently taxpayers who avail the composition scheme, traders, manufacturers and restaurant owners pay a flat GST rate of 1, 2 and 5% respectively. Other recommendation that the GOM has recommended is that increasing the threshold of availing the composition scheme from 1 crore currently to 1.5 crore. This is something that the GST Council will discuss and decide whether the threshold can be increased so that more taxpayers can avail the composition scheme. Other recommendation made by the group of ministers that the GST Council would consider is lowering of GST rates on restaurants and having a single rate of 12% for both air-conditioned and non-air conditioned restaurants. We spoke to 3 state finance ministers, and here's what they had to say.
There are a number of intermediate products like building materials which have been put in the highest bracket. I think it is inappropriate they be there, so they should be brought down. But as for the other consumer products, we have to look on the merits.
As far as composition is concerned, we had proposed that if the threshold could be increased from the present crore to 1.5 crores, if interstate sales could be allowed, and so on and so forth. If tax returns could be paid quarterly instead of monthly, if the HS code could be simplified, and so on and so forth. But basically, we need to look at 3 main areas to get the GST system going. One, of course, is the rates. If the rates could be brought down, compliance issues could be sorted out, and the IT backbone, the GSTN, if that could be made more efficient. And I think if we could do all 3, then I think within the next 2-3 months, India could be sailing through.
Composition can be made a little bit more inclusive and easier to comply with as well. So our proposals are related to composition scheme, and I think a group of ministers has already looked into it and they've come up with some suggestions, and I hope we will also push for those.
Shifting focus to the commodities market now, and crude resumed its rally as escalating tensions in Saudi Arabia and throughout the Middle East raised concerns about stability in the oil-rich nation. The latest trigger is that the update that Saudi Arabia has asked its citizens to leave Lebanon. Now, Jayesh Kilani has more details on crude especially. Jayesh, over to you.
Morning, Alex. Absolutely right in terms of the tensions that we are seeing. But crude oil prices did surge overnight. However, if you look at the Asian morning hours, both Brent and WTI are trading with a slight negative bias, 1/10 to 2/10%. That is, now we are picking up that Saudi Arabia has plans to cut exports to all the regions that it exports to by the next month. And Clearview has a note which says that Saudi and Russia alliance needs to go through entire of 2018 as OPEC is continuing to put a stop to the global glut. That is, as far as base metals are concerned, we saw some bit of negative bias come about for them on the LME, led by nickel, which tumbled as much as 3%, followed by copper. Now copper prices are trading at a 4-week low after we saw weaker China imports. As far as gold prices are concerned, we're seeing some bit of stability come about in the range of 1285 to 1290, and also that gold prices are looking to snap the 3-week losing streak. They're up about 1.5% for this week.
Thanks for that. Thanks so much for that. But let's move on now to IPO Street. Third-party logistics provider Mahindra Logistics is all set to move into its spot on Dalal Street today. Well, the IPO has been subscribed nearly 8 times. Somit Sarkar is here with all the details. Somit, should be a good listing if the subscription numbers are anything to go by.
The listing will have to wait and watch how it goes out, but then Mahindra Logistics had raised around close to 829 crore at an issue price of 429 rupees. Now the issue was subscribed nearly 8 times, with most of the demand coming in from the QIB side. Now the QIB portion was subscribed around 15.6 times, while the HNI portion around 2 times and retail portion around 6 times. Now the street is expecting a premium of rupees 20 per share, which is a listing gain of just 5% in the stock. So let's see how the valuation would stack up on a listing. pricing. Now, at a share price of 450, the market capitalization of the company would cross 3,200 crore. Price to earnings ratio would be 70 times, while price to book 9.2 times, and market cap to sales would be 1.2 times. Now, at a listing price of around 460, the market capitalization would be close to 3,270 crore rupees, while price to earnings 72 times, price to book 9.4 times, and market capitalization to sales around 1.2 times. Now, Mahindra Logistics is one of the largest third-party logistic company, and it follows an asset-light business model. Now, asset-light business model means that most of the assets that the company uses for operations are not owned and taken on lease by the company. Now, if you see the revenue of the company, it can be broadly categorized into three different ways, that is segment-wise, client-wise, and source-wise. Now, in segment-wise, the company operates in two segments, that is supply chain management and people transport service. Supply chain management contributes around 90% of the revenue, and it grew at a compounded annual growth rate of 19% over FY15 to FY17. The auto clients formed a major part for the company, and the revenue portion of the auto clients grew at a compounded annual growth rate of just 7% over FY15 to FY17. Now, if you see, Mahindra Group contributes most of the revenue to the company, and the contribution coming in from the revenue contribution coming in from the Mahindra Group grew at a compounded annual growth rate of just 3% over FY15 to FY17. Now, if you compare Mahindra Logistics with its peers, the company's revenue grew at a compounded annual growth rate of 15% and net profit at 17%, which is higher when compared to its peer, but the EBIT margin remains subdued at 2% because of its asset-light business model. If you see the return ratios of the company, on return on equity, capital, and return on asset, all remain subdued when compared to Blue Dart and TCI because of its asset-light business model, but it was better when compared to Gati. Now, if you see the balance sheet ratios of the company, the book value per share remained at 49 rupees, total debt was as low as 53 crore rupees, while debt to equity was as low as 0.2 times, which is better when compared to Blue Dart and Gati, but at par with TCI.
Right, we'll leave it at that, Somit, and we'll be back with more on that story over the course of the day. But let's move to earnings now, and a lot to speak about. But let's start with Aurobindo Pharma. It reported earnings post-market hours on Thursday, and it was a healthy quarter with most of the parameters surpassing analyst estimates. Darshan Mehta is back to give us an idea as to what the headline numbers there were. Darshan?
See, Alex, the headline numbers were good on all parameters, but, the devil lies in the detail, what they've done internally. And that is where, a little bit of concerns can actually come out, whether these numbers were that healthy or no. Now, first of all, if you're looking at the revenue growth of 17%, they've come in at 4,400 crores versus our estimate of 4,100 crores. Profit also, our estimate was 685 crores. They've managed to beat it by close to 100 crores here. EBITDA also 1,117 crores versus our estimate of 1,060 crores. Margins in line 25% because the other expenses have gone up significantly by almost 160 crores. Formulations did well, up 22% on a YOY basis and almost 20% on a QOQ basis. API revenues did better on a QOQ basis. Now, US grew almost 21%, and that was led mainly by the 2 months of Renvela generic exclusivity that they had. Europe was up almost 37%, but it was because of the full quarter integration of generics pharmaceutical. So that is something that led to the growth that coming in. Growth markets were up 38%. Now there was an increase in debt this time around. Higher working capital led to an increase in debt for the company. Gross margins improved significantly because of the contribution from Renvela. The tax rate, the profit is much higher because the tax rate was much lower. It was at 20% versus 27%. And R&D expenses were surprisingly very low at 3.6% of sales versus, the expectation that, analysts had that will be close to 5%. So that is something internally that, all the details will come out in the conference call at 8:30. But overall, it was a strong number, but we need to find more clarification on these internals from the management at 8:30.
Absolutely, Darshan. So we'll watch for those details. But moving on to all the earnings that will come out over the course of the day. And first up, the country's largest lender, SBI, will report its earnings. And if you keep out the exceptional gain from the SBI life insurance listing, the bank is expected to report a muted growth. Shraddha Babla is standing by with all the street estimates for this quarter. Shraddha, This is the second quarter after the merger of associate banks. What's the expectation there?
That's right, Alex, and hence the ongoing consolidation would, probably continue to bear as far, on the earnings numbers of SBI, and of course, and that's also a reason that we cannot compare numbers on a year-on-year basis. So sequentially, analysts are expecting the net interest income to grow by about 6%. Net profit is expected to grow by a sharp 38% to 2,759 crores. Like you said, the big jump is owing to the capital gains that could come in from the 8% stake sale in SBI Life Insurance during the quarter. When it comes to margins, however, the outlook is positive. They're expected to improve sequentially due to two factors. One is, of course, the savings account rate cut that the bank had taken, which will support margins, and also partly due to the recent capital issuance. They'd raised a QIP in the first quarter. That's the reason margins should remain stronger. The pace of provisioning, nevertheless, is expected to remain higher. Loan growth trends are expected to remain weak, while stress additions are expected to moderate from the June quarter numbers, but they will continue to remain high, like we have seen in the case of other PSU banks. But the key focus will be on the recoveries and upgrades from the last quarter in terms of NPAs, especially with respect to some of the agri and retail accounts. Corporate slippages, most of them are expected to come from within the watch list itself. So, of course, we are going to be watching out for any comments with respect to the associate banks integration. The guidance and trends with respect to the asset quality movement, the watch list and the resolution progress, and the provisioning requirement, of course, for accounts in RBI's list also remains the key monitorable. Just want to highlight or share 2 or 3 key numbers from the first quarter, which the market will be keeping an eye out for. Slippages during the June quarter came in at 26,000 crores. And most of the analysts are expecting that number to come in broadly around 20,000 crores this time around. So any number more than that could actually be taken as a negative cue for the stock. The corporate watch list stood at about 32,000 crores. So these two numbers are going to be key to watch out for.
Right, Shraddha. Thanks for that. Let's move on now. Bharat Petroleum is the last oil refining company in the Nifty 50 to announce its results for the second quarter. Those numbers will be out today. Now, it's likely to be a strong quarter for them. Somit Sarkar has all the street estimates. Somit?
So on a standalone basis, BPCL is expected to come out with a strong quarter. Though revenues will be marginally higher to 58,000 crore, net profit would jump around 225% to 2,400 crore. EBITDA would also rise by around 178% to 3,400 crore, and margins would expand by 400 basis points to 6% in the second quarter. Now, gross refining margin, that is a key number for an oil marketing company, would come in at around $9.3 per barrel versus $4.9 per barrel in the last quarter. Now, sequentially, this is a strong quarter on the back of higher margins, higher refining margins, a strong volume trend and inventory gains. Now, this quarter the company is expected to come out with an inventory gain versus an inventory loss of 730 crore in the last quarter. Now, crude throughput is expected to remain in the range of 6.2 to 6.7 million metric tons in the second quarter. Now, refining business would be better, but marketing business could take a hit because of the digital discounts that the company had given and because of GST. Now, the major benefits of Kochi ramping up of the Kochi plant would come in the second half of financial year 2018. So stabilization of Kochi plant would be a key monitorable along with the outlook on gross refining margin.
Thanks for that, Somit. Now, the other big company that will put out its numbers today is Mahindra & Mahindra. And the headline numbers here, you see that net sales, the expectation is that it'll be up about 21% on year. And net profit is seen growing by about 4%. Now, what are the key parameters to watch here? Margins are expected to come in better at 13.1% compared to 11.7%. And the factors at play here, the fact that overall volumes increased about 16% in the second quarter, the higher taxes and the low other incomes that is expected to impact profit, and the margins seen improving year on year because of higher tractor sales. And there's a booming tractor sales, in fact, for M&M. But what are the factors to watch for in the management commentary? Remember that press conference will take place around 3 o'clock today. And the outlook for UVs and tractor business for FY18 is going to be key, as well as a product pipeline both for tractor and for utility vehicles in FY18 and 19. And finally, an update on two-wheelers. Let's move on now. Shraddha Babla joins in with stocks and news. Shraddha, what are the stocks on your list today?
Well, to start off with Axis Bank, because they have a board meeting today to consider raising of funds. Now, remember, newspaper reports have been talking about Bain Capital and two other global investors looking to collectively invest about 10% in the stock. So that investment news could keep that counter active. You also have Just Dial, where according to a Business Standard report, it says that Google is in talks with Just Dial to acquire its business. Now, they have been talking to Just Dial for an acquisition for some time, but apparently both the companies have entered into exclusive talks over the last 2 months or so. So keep an eye out on that name as well. You also have an ET report which suggests that Reliance Industries could be interested in buying certain parts or divisions of Alok Industries. So you could see some reaction there as well. We're tracking Indiabulls Housing Finance on the back of a bulk deal where PNB Paribas Arbitrage bought about 0.7% stake yesterday. And that apart, Alex, of course, you'll also have some of the consumer or consumption related stocks which will remain in focus on the back of the GST Council meeting today, where expectations are that there will be a reduction in the items which fall under the tax slab of 28%. So some of those stocks will also need to be watched.
Right, Shraddha. And let's move straight on to the big brokerage calls of the day, and Agam's back to give you that. Agam?
Well, Alex, I have two on my list right now. Starting off with Citi on SBI Life Insurance. They've initiated a buy with a price target of 800. That means a potential upside of 22% from current market levels. They suggest that the franchise trends will drive growth, which is expected to be robust. And they're also saying that SBI Life looks well positioned to capitalize on increasing market share as well as financial savings in India. Moving on to the next brokerage, we also have Bank of America Merrill Lynch on Britannia. This is also an initiation with a buy and a price target of around 5,500 with a potential upside of 16% from current market levels. And Bank of America Merrill Lynch suggests that they expect healthy uptrend, especially in the operational profits, that's the EBITDA, and they expected the margins to sustain, which are reasonably high considering Britannia caters to the premium segment, and a large cash generation raises chances of a higher dividend payouts as well, which is why Bank of America Merrill Lynch is also bullish on Britannia.
Thanks, Agam, for that. But, there's a lot to talk about today. You have a lot of earnings, key earnings, and you also have the GST Council meeting. But there are also quite a few stories that you can find on the website that are interesting. There are a couple of them. First up, salaries are projected to increase by 10% in India in 2018. The highest in the Asia-Pacific region. That's according to the Q3 2017 Salary Budget Planning Report that was released by a global advisory broking and solutions company, Willis Towers Watson. The highest projected salary rise is seen in energy, FMCG and retail sectors. Moving on, the Airports Authority of India may look at issuing bonds to raise funds to develop existing and non-operational airports as the government looks to boost air connectivity in India, which is now the world's third largest aviation market. Well, that's the end of this edition of Daybreak, but do stay tuned. All you need to know is up next. This is Bloomberg Quint.